Okay, I think it's working now. We got it with sound. Yeah, the sound should be fine as well. Hello guys, welcome to my new channel. This channel is called Crystal Gains. And if you've been following me for a while, I started with the Trading Parrot. It's been 5 years since the first video in the channel, just about a week. That there was the 5th birthday of the channel. And this channel, if you wonder why a new channel, is because basically I want to give it a try to have a separate channel and keep things tidy when it comes to trading. The attention into Bitcoin, people that like to trade Bitcoin are very focused on Bitcoin, and not everybody wants and cares about general markets. And as a consequence of that, the YouTube algorithm is punishing sometimes when I make general market trading content in my main channel, the Trading Parrot. Therefore, we're gonna give it a go to do the videos separate. If you are in the stream and you're watching this, yeah, I will really appreciate if you can type in the comments if the sound is good, if everything is working. This is the first test that I'm doing, and I'm planning to do a full stream of 1 hour covering different general assets, not just stocks. By the way, I'm showing you just the stocks, but we are going to cover everything: indices, we're going to cover commodities, forex, and stocks. The way we're going to be doing this is I'm going to cover different assets, different days. And I'm gonna also focus on things that are at extreme levels and things that have just confirmed to break resistance or break support. So if we can, the main idea is to scan for opportunities. So there's plenty of assets where we can find those opportunities. So if you're interested in trading a wide spectrum of assets, this definitely is going to be the channel for you. There won't be any single type of assets that we are intentionally gonna skip. So let's go straight with the most important ones, with the indices. We're gonna start with the S&P 500, and as you can see on the RSI, we can see that there has been a breakout on the daily. So there is some momentum building up in this structure in here that has a final low around the 20th of November. And then we started building higher lows. We still don't have higher highs in here, and we have a bearish divergence. But we need to identify as well where we are in terms of support and resistance. We have already confirmed the 6.7K as new support, and at the moment what we are building here, in my opinion, is a bullish structure. We already pinched this high and came back below the resistance, which could have been considered a liquidity hunt. Let me draw it with the brush in here. So this went higher than the previous high and came back down. That in theory should come and retest the lows. So as long as we defend the 6.8 in here, we have a chance, and we produce a new higher high from here, we got a chance of continuing with this trend. Now notice that this is a little bit of a bear pattern. Let me show you why, because this is a wedge that is constraining in here. So this has that opportunity to get into the 6-7K, and at that level there is some liquidity. There is a liquidation pool, which is more or less at the 7,000, the 700 on the S&P. You can tell that it's more or less the same structure if we look at this chart. Let me put this like that, and you're gonna see. So there is an opportunity for price to break out in this area instead of a breakdown, which is the most expected outcome from this pattern. Statistically speaking, you expect to have a breakdown like that. So watch out for a breakdown below the area of the support. But if we come in this area, what we need to do then, turn this into support and continuation, because this could still end up playing out as a let's stretch the hand, let's grab the liquidity, and then still let's dump. So there is an opportunity for upside just thanks to the excessive amount of shorts that we have in there. But at that point, it's a very decisive moment in terms of whether we're gonna still break down to the downside. Now, notice the difference between the S&P and the Nasdaq at the moment. You can see that the S&P is aiming to reach for that liquidity. You can tell by the how it's putting new highs and new higher lows, whereas the Nasdaq has a structure that is not achieving new highs so far. We got that resistance at 25,600, and let me go quickly and see the liquidity around that area on the Nasdaq, and we got 9 concurrent views. Wow, that's a good start for a new channel. So thanks so much, guys, for being live, and I'm gonna check the comments as well in here. All good here, so that's great that we have great sound. On the Nasdaq, we have less liquidity to hit, but if we were to pinch beyond that level, we have the 643 on the QQQ. And then we have 678 slightly higher. Let's go back to the chart in here. So on the Nasdaq, as I explained, I'm monitoring this structure. This resistance for me is very important, followed by the horizontal, of course, that is around 26K, but the immediate resistance is right here. A failure around this could mean that we come back into the 24,700 for another retest. Notice that we have already been there. So ideally, we don't want to go into this level. If we do it, we could do it something a little bit more delay, maybe into the beginning of February, if we are still not breaking out from that level. I was monitoring as well today the Russell. The Russell is low cap, and low cap is already taking a step ahead against the Nasdaq. You see that the Nasdaq is against resistance and approaching it, whereas the Russell is already breaking out and coming for a retest at the 2.5. So that's very interesting. And other assets that I'm monitoring at the moment, and since this is a live stream, guys, you can always write down comments, and that will really help to show this video with the algorithm to new people. So whichever question you have, just drop it there, and that's definitely gonna help this brand new channel. And I was gonna mention that we got a few. We have the DAX and we have the FTSE 100 both putting new highs today. The DAX has broken resistance, which was the 24,600. That's something that we attempt on the 10th of October, but now we have managed to put a close above that level of resistance, right? We created here a liquidity hunt, and we got a signal that P is a percentile applied to the indicator that, by the way, since this is the first video, I'm gonna explain which indicators I'm gonna be using in the channel, and I'm gonna try to keep it very simple so you guys get familiar with what I'm gonna be using, and we don't have to be repeating all the time. But I'm gonna be using the cross-fee ratio. I really like it because it tracks volatility itself. And you can tell in here that the volatility peaked there, and then you get some correction. Sometimes when the volatility peaks, you get some sideways, and you stop with the upside or the downside, depending on which direction you were going. In here, you got volatility peaking to the downside and right at support. So that was an opportunity to enter in the long that now is breaking out, right? That is my preferred setup. Long support with volatility dropping to the bottom. The next indicator is the Z-score, which is also a way to visualize extremes. And in this case, you got deviations away from the mean, right? That's what the Z-score is tracking. That can be negative or can be positive. If it's negative, it means that we have gone down in the price too far away from the mean. In this case, it can be 2 sigma or 3 sigma. That means that we are pretty far from where we should be, but at the same time, it allows us to look back in time and to find some alpha, right? So for example, this pinch of 3 sigma has happened 1, 2, 3, 4, 5 times. And each individual time is a great opportunity that we do want to be monitoring. I'm getting notifications on this, and on every video when I go live, I am going to be mentioning which things are extreme at the moment. So for example, the DAX at the moment is 2 sigma to the upside. So it's getting very overextended. You could also see it on the RSI. You can see that the volatility is also getting close to the percentile, that the same one that we reach at these highs of 24,300 is coming back again. So that could be, if we lose support on the 24.5, that will be an opportunity to short, okay? So it's kind of configuring at the moment an opportunity in here, but it depends if you are a contrarian or if you are a trend follower. It is different setup. So if you are looking for an entry, a golden entry, I like the entry of support, okay, for the long. If you are looking for a breakout and you want to follow trend, you don't buy it at the breakout itself at 25,000. You wait for a retracement, you see if it holds support, and then you follow the trend. And if you are contrarian, you enter at the 25,000, you wait for a small correction, and you lock in your profit. In case the trend follows, then you get hit with the stop loss. And at that point, you just take not a small loss, but a break even, right? So those are the two different setups that we are going to be focusing in the channel: the trend following or entering at areas of high risk to reward. We're going to try to highlight those when it happens. And apologies, and bear with me if the channel is not going to have necessarily the pace and the tidiness in terms of presenting each of the things, but I'll get there. I want to cover a lot of assets, but I want to do it in an organized way and with some flow as well. But I need to get some elements out of the way, explain the things that we're going to be doing, the indicators we're going to be using, and all of those sort of things. Let me see what else I wanted to show you today. Let's have a quick look at gold, because gold broke out from the resistance of 4.3. It came back for a retest, and at the moment we are within a retest on the price. But what people are not necessarily seeing in here is that we have corrected pretty decently from the 4.5 into the 4.3, and that produced a breakdown on the daily. So now we are in the revenge area in there, and we need to monitor if this is going to be a rejection. From where? Precisely from there. If we reclaim this yellow line, that is a bullish sign, and in which case that could be continuation if you enter at support. Support was 4.3. That will have been golden entry. In terms of volatility, let's have a look. No, there hasn't been any signal. We are just coming from the zero line on the Z-score. Let's go to silver, because silver is attracting a lot of people to trade the asset. If you look at this on the weekly time frame, it's just crazy what it's doing. And something I wanted to see in silver is try to answer the question if this is it, okay? Because everybody is wanting to jump on this, and there could be continuation, right? It's running very hot, and there has not been yet a single breakdown on the weekly time frame on silver. So it's not yet showing any signs of weakness, although we have plenty of area fair value gaps to come back down for some deeper pullbacks. It's not yet happening. So for example, in here you have a high of 87 on the weekly, and then you produce a higher high of 91, and from that 91 I would have expected a decent correction, because also the what is it called, the momentum, the volatility has peaked in here, it peaked there, and it was sideways for, I don't know, from May to May, 1 full year sideways after the volatility peak. In here, the volatility peak, and it had a retracement of 16%. Now we are peaking from very high, and we still don't show the bearish divergences that we used to print once we get a very high level, a 91 on the RSI. And that is basically saying that if there are some pullbacks, those should be in theory for buying the dip. On the daily, let me see. So this is 89. On the daily, we have a breakdown, not on the weekly, but on the daily. So we need to monitor if on the daily, this gets a rejection from an RSI of 70, that could spread into a breakdown in the weekly. But the weekly is still extremely happy. Let's have a look at copper, because it's putting new highs on the daily time frame. It just took the $6, and at the moment is trading at 6.08. And we are approaching levels of RSI that we have reached in 10th of February. Then we have another high at 78 here, and around at 77 recently when we were testing the $6. So for me, copper is kind of following what gold did first and then silver, and it's just catching up. So if metals continue the trajectory to the upside, or if there's a little bit of contagion in gold, copper mimics what gold has done, and some of the flow goes from gold into copper, we should be seeing copper doing a lot more than this. Because this rally, let me see, this is at 92%. But look what gold has done. This is just crazy, right? So you got almost double, and it looks very different. The copper does a lot more swings. So this is 2024, this is 2025, and we are just, if you look at this from the distance, this is pretty much a double top. So it hasn't proved enough copper. So let me see the health of copper to see areas that we could be looking for opportunities. So there has been this breakout. This has come to support at 4.36. What I would like to see is a retest of $5, but a clean retest, not like this one that went into 6 and straight back into 4.3. I would like if this extends a little bit more and comes back into $5 for a retest. We are on the weekly time frame. Let me see. What is this looking like? Okay, so it depends how we close the week. If on the week we get rejected from the $6 on copper, we could come back into support, right? And that support is 47, 48, let's say 48. Let's put the 48, just one line I need on the reverse RSI. Let me get rid of some indicators. So, okay, so that is $5, is it? Yes, it's $5, perfect. So if on the weekly we get rejected from the 68, similar to the rejections that we have there, copper could come, the RSI of copper on the weekly could come to 48. And by doing that, it can come to the $5. And that is, you know, the most bullish support that ideally you want to defend. If it doesn't go really into the 48, it could come into the 50 where we have the median as well. So somewhere around the 5.3 to the $5, we got a chunk there that we can use as an entry for bullish entry for copper. If you want to trade, obviously, the short from where we are or slightly higher in here, betting on a rejection of resistance, because we can, short resistance, long support. Notice that we are in an uptrend, so you need to be advanced to take a short on this and really, really know a lot more how to get out of trouble if it doesn't play in your direction. Instead of thinking how much you can make if it falls. Focus on the loss. Don't focus on the win. Focus on how much you could lose and how to lock in a situation of advantage. Let me do a few more lines in here. A few more lines. So that is the channel where we are. So if we get rejection from here on copper, that could align as well with the rejection of that. And we are at 2 sigma. So the last rejections were at 2.5 sigma and 2.8 sigma. At the moment we're at 2.3. Yeah, well, let's see, because this could turn also into an actual breakout. Of course, there's always a bullish and a bearish case. That's why you have to not focus on what's the right direction, but what's the right risk management for the opportunity. There's the opportunity of shorting this, sure. There's the opportunity of longing this, yeah. But at what timing and with what risk management? That is the main question, not which one to do. Of course, you can always have a preference and you can always have your own bias. But, bias is bias. It doesn't mean seeing the future. Oil. We got a setup that I want to discuss today, which is this one. It's on the weekly time frame, and we see how constrained we are in this area. And since we're getting a lot going on around oil, thanks to what happened in Venezuela, not that it's a good or bad thing, nothing political here, just literally volatility source for our charts. We got here some double bottom formation around 53, and we have a few attempts to break out in this area. So again, we got an opportunity to enter a long or a short in here. Bias, I will prefer at this area to look for longs, okay? But don't get me wrong, you could go into resistance in here and you can still look for a short and take a small scalp if you want. And if you can afford that risk with your personal knowledge on trading markets. At the moment, on the weekly, what we are seeing is the beginning of a breakout on the weekly. It's a low quality one, okay? But it's basically there is a squeeze in here. We've been holding support and now we are starting to stick our head beyond the resistance. That is happening right at support. And we have pinched a few times -2 sigma, and the volatility is around the area of the percentile, the lowest percentile. So somewhere around here, we could be seeing a buy signal coming from the cross-fee ratio. We could be seeing a breakout of momentum and a -2 sigma. That is another setup. I was intending to leave in the charts the setups. So setup will be something like this, right? Like enter at support if we get into support, or enter around this area and hope for a breakout to this way. So if you go into resistance and you fail, you lock in a very small profit. If it breaks out, we trail it into next levels of resistance. So let's leave it like that and let's try to remember to do that. Yeah, another commodity I wanted to cover today, and by the way, you can make requests in the comments if you want me to cover any of these assets specifically, right? So we have Forex, we have stocks, but if not, don't worry, I have plenty of things to pick up because I'm always monitoring what's going on with the markets. So on natural gas, we have a setup as well. We have some confluence of horizontal previous support and resistance, which is at around $3 to $3.1. And we have a channel parallel to the upside, currently meeting with the confluence of those two. the upward sloping support and the horizontal support as well. And that after having seen a pretty decent rejection in here. So let me now look into momentum. I'm going to do it from here, and we are right below support on momentum. So it all depends how we close this week, because we could see a breakdown from there. And that, in theory, is forecasting that we could see breakdown from $3 and possibly going to the next level of support, which is at 2.2. Let me see this on the daily to see more detail. We got the horizontal at 3 and the 2.7 coming in thanks to this low there. So if this turns into a breakdown, it will most likely do something like that if it's an actual breakdown on natural gas. But if we reclaim, for that we need the weekly to start moving during this week back above support, so to bring back the RSI that is currently flagging a breakdown. So there is an opportunity to long this at $3 or slightly lower on a liquidity hunt. And there is the opportunity, if we break down and if we settle the week below it, to take a short. So we need to be monitoring. Those levels are very important. We got some new comments. Good morning. Congrats on the new channel. Love the new channel, TTP. So that's great, guys. That encouraged me to do this more often, because I really need to do this. I have to do it for myself, and it gives me discipline to do it live. It really improves my trading. You wouldn't believe me. So the last year I made much more from trading than from anything from the channel. The channel was barely paying the salaries of my team, which says a lot, right? Most of the channels is the opposite. They don't trade anything and they make all the money from the people, which is a little bit disturbing, really. So you need to pick from who you want to learn to trade new tricks. Right, so before we go into NVIDIA, let me be a little bit tidy and follow a pattern before I talk about that double bottom on NVIDIA. So we got a few things that are triggering, that are important. We are always going to look into what's going on with the charts, with the alerts, because that is a way to stay on top of everything without having to look at everything. As we got support broken on the DXY. So the DXY gained support in here at $98.4 and then it lost it again. Why? Because it's coming from a breakdown on the daily and it has test trying to reclaim, doing a revenge rally against this yellow line and still not managing to do it. So it's extremely important, not just for if you want to trade dollar, you could trade dollar, right? But if you want to trade risk on assets and any assets really that are priced in dollar, you want to know what could be coming ahead for dollar. And if you get a breakout in here on 52 and you hold 98.5 as support, we could come back into the top of the range, which is another visit to around roughly $100. So this line there, extremely important. I just got a signal last night saying that we broke support, because if I zoom in, you can see that we were below it, right? We've been trying to go beyond $99. We got rejected, and then we went below 99 and came back, and now we are kind of holding support again. So maybe tonight I'm gonna get another signal saying you just regain support, which is bullish. If we do that, I want to see that this guy closes above this line. Let's put the line properly. This is terrible. Is somewhere like that. So we're already back above support. You see, you need to do things properly. And that's the retest, and that this is coming back into 49. So strength on the daily on dollar. So, you know, that is not necessarily great for Bitcoin, with a few exceptions in history where they rally together, but most of the time it's a bad thing. So on the weekly, it's the opposite. We're getting a breakdown. So that momentum that we are seeing on the dollar to the upside, potentially the most likely scenario is that dollar is just finding momentum on the daily to retest the breakdown on the weekly. So if you can walk and chew gum, you're going to understand what I'm saying. There is some strength on the daily, but that strength is limited to the daily time frame, unless the weekly also reclaims the level of 47 RSI, which so far is just a test. So it's at the moment, weekly is doing a test to reclaim and potentially continue to the upside. The weekly setup is doing this and going slightly higher, getting into 99, and then you get the weekly to reclaim the yellow line. If it reclaims the yellow line on a weekly close basis, you have a chance to complete the gap and handle. And that brings the dollar back into 105, which is more or less one of the setups that we've been talking since July in 2025. So if it completes, wow, it's been a long time in finally completing. But if we get rejection from the weekly, you get it from around there and you come back into support, which is at the moment at 96. That will be the third time that we do that. And dollar coming back down is good for risk on assets. Dollar going up is bad for risk on assets. So yeah, that's with dollar. Let's go with the next one, which is the Dow. What are we seeing with the Dow? We are seeing the resistance broken. And we are testing the resistance on the RSI, and we are at 2 sigma. What has happened every time we are at 2 sigma? Basically overextended to the upside, and at the same time testing resistance on the daily. Well, we have had a few small corrections. So far, there are no big corrections in all this range in here. There's just those corrections, which are, let me measure, like 3%. This one is 6%. And they can be more or less timed so far with the RSI and with the sigma at 2. Okay, so watch out with that, because we are at the same place. So if we repeat that performance, we get a 3 to 5% back into support. If we break out in here, we are breaking out from 67. So that could mean that we accelerate on the Dow. So keep an eye on that. If you're looking for an entry long, because you're still bullish, look for support, okay? At the very least, wait until this thing comes back into support, or prefer to look for areas on the lower area or lower range of the RSI, or below 0 on the sigma, or even better with the volatility peaking to the downside, which we haven't seen in a while, with the exception of April in 2025, when we have this, which is a decent correction at that point. Let's go with the next one, which is, we already analyzed, which is copper, that broke the resistance. We also have an opportunity here that we could cover, stepping now into Forex. The euro, Canadian dollar is right there at support, and it has resistance broken. So it has reclaim in here. It's below this trend line on the daily. There's still not breakout, but you can see that we are being compressed in here, the euro against the Canadian dollar, and it's forming some sort of double bottom around the percentile. So there is an opportunity, a potential opportunity in here to complete the double bottom and to push into 163 from that support. Okay, of course, invalidation below 16, because there's an incoming area of support at 16, but that will mean that we are still within this formation in a downtrend. But the formation is bullish on the daily, right? So this is a falling wedge, a push against that support. If it fails, it could come down into the 16. That's where it's pointing to, next area of support. So again, long from the double bottom, but it could fail, and then there could be a long from 16, or you could actually short as well this level, thinking that there's still some more additional downside into 1.6. Well, it also depends on the broker that you're using, whether that is good enough in terms of the fees and all that stuff. So I'm getting notifications on resistance and support, and I'm also setting them up for the sigma. So when we are below 2.0 or minus 2.0, the sigma, on the Z-score, I'm getting notified, so just so I'm aware that it's extremely overextended. We can get to 3 sigma though, and it's possible. Let me see if I got another one. We got Australian dollar against Canadian dollar, and we've been hammering resistance at 0.92 in here, and we got a very interesting formation from the lows. I think this is more or less like this. That is my upwards sloping support, something like that. And then we get this one there. So that's a bearish pattern at the moment, at least the way I'm seeing it. Let me know in the comments if you disagree, but we are approaching at the moment that resistance there. So that's the bearish case. The bullish case is if you hold the 0.92 now as new support, in which case you have the opportunity to carry on to the upside. So the area to look for along is 0.92, because if that turns into new support and it holds with giving enough room for breathing, right? So because this could come into 91 before getting bought up back above 92, hypothetically speaking. And if it holds that as new support on a daily basis, there's an opportunity for expanding against the Canadian dollar. But there's also the opportunity of the short, the liquidity hunt, basically getting the rejection from around here and going back down and eventually breaking down the ascending wedge, which is a bearish pattern. It's calling for going back at the bottom of the wedge. That's at least according to the books. In terms of momentum, on the daily, we are seeing a breakout. So we got a bearish pattern, an ascending wedge. We got a breakout on the momentum to the upside. We are overextended with the sigma, and we are getting 2 top levels of volatility to the upside. So what's going on? It's a breakout that could be used, as I said. You could look now for support and expect further upside and play that trick, or think that this is just too overextended and push it back down from as high as possible, right? That is the bearish setup on this particular pair. Let me see what happened with the JP225. We got a double top. We're attempting to break out above the double top. We already have a double bottom. It played out nicely. We have a very clean structure in here, a channel, and we have already an ongoing breakout. But let's do it like this. So like that, like global is resistance. But if you place it like this, you got, a low quality breakout that already played out. So we are late for that one. That will have been great to trade from 48,900, the breakout, into this area. At this point, you look in the stop loss, trailing stop loss, and you see if this is going to continue. If it comes back down below 51, then you take the profit and you say, okay, that was it. Because now we are at 3 sigma almost. We are hitting the resistance on the daily. We are overextended in any way. So setups in here is to look for taking the fair value gap at 50,000 and looking for support again there for a new higher low. If you are a trend follower, that is the trade follower. The contrarian obviously is believing that in here we're going to put a double top, and you take as high as possible the short at 53,000, and you lock in your profit as soon, and hopefully if we get into 50,000 and we find support there, then you lock in your trailing stop loss on the short. So you see, you can take both. If you're new to this, don't take any. Just keep watching. and practice, of course, with paper trading. Let's go with US30 USD. We got a very similar setup. This looks very similar, very similar. Let's see the structuring here. So I'm gonna do it like this. We got a breakdown. Why? Sorry, I put the wrong one. Oops, sorry about that. I'm getting confused. I didn't do the DAX yet. I think I did it, that we had the breakout. Yeah, I did it. Sorry about that. And I wanted to check Apple. Yeah, because we got a signal and there is a head and shoulders on the daily. Yeah. So we got a bearish opportunity in here. You can tell that Apple is repeating the play. So there was a head and shoulder in here and it broke down and it managed to get to the technical target. Let me draw it for you. So that is shoulder, head, shoulder, and then the technical target achieved. Now it's a smaller one that is like that. It's got a neckline around 265 and probably a target towards the 250. And we're gonna use in here a short position. So that is something like this. You need to think about your risk management and where to place stop loss. That's something that you need to decide, because it even depends on the fees on the exchange, whether it's worth taking or not. You know, I'm not gonna tell you put the stop loss here and then for your exchange it doesn't work, or for your risk management, or for the size of your position. There's a million variables, and I really want to stay away from telling you where you could place it, right? What works for me might work terribly for you. But that is kind of the bearish setup at the moment. The bullish setup is if we break down from 265 and we reclaim the 265. I love that setup. That is the fail breakdown setup. You go there, you're reclaiming here. And how do you trade it? Do you wait until you're back above 268 to take a long? No. You go when there is the breakdown, when there is the big drama, when everybody's like, oh my God, we're going to $100 on Apple. At that point, you enter slightly there as a sneaky bastard, and you enter with your long, and you hope that is going to reclaim. Obviously, you need to look for your long stop loss in case it's invalidated your thesis. With Apple, I want to see liquidations. We got the head and shoulder right there. And we got a liquidation at 296. That is a reason to invalidate the head and shoulder. So if you see this closing today below this on Apple and you reclaim, there is a chance. So let's say you enter here and you get lucky in this before daily close, this pinches that, takes 260, and you enter at 260 and suddenly starts going back above the neckline and you find yourself back at 268 and you're in profit. Okay, lock it with a stop loss and see if this really wants to go there. And then you are that dude that enter at that point. If you're wrong, hit stop loss, you know, or DCA into other areas of liquidity. Remember, this is not trading advice. This is educational, entertainment purposes, and primarily for me to develop my own thesis and then find what I want to actually trade myself and be more disciplined in what I'm doing. Let's go with Palantir. There has not been any requests in the channel. I was wondering if we see an Elliott Wave 5 on the Russell. What do you think? I'm not an Elliott Wave kind of guy. I do understand the language, but I don't have the full expertise. So you're talking about a wave 5, and I wonder how you're counting your waves and in which time frame as well. Yeah, because you know this is the big mystery, because even the people that are experts that I follow on different channels and I see them using their waves, they some days they appear saying, you know, I'm gonna assume that these are the waves. This is 1, this is 2, this is 3, this is 4, and then suddenly 2 weeks ahead they say, you know why, we counted everything wrong. Let's count it as if this wasn't the wave 2 or the third, and let's move everything. Let's scrap the whole idea and let's put it in a way that is, you know, more convenient with the new narrative or whatever. And that's the part where, you know, I'm like a bit confused why they changed their mind so much to please the what's going on with the chart, where they should stay more static, in my opinion. But anyways, on the Russell, so the Russell is taking 2 steps ahead of the Nasdaq in terms of the breakout. The breakout on the Nasdaq is still not happening on the price, neither on the momentum, but on the Russell we get something going on in here. It's a small move on the daily that will be really good if it completes out of this. Notice that there has been already a breakout, right? So that happened on the 24th of November. And now I'm gonna speak my own language. So this in here needs to go into 66 to produce a layer 2 breakout. And that 66 comes in, let's bring it back in here. That 66 means that the price needs to go to 2.627 to find resistance. So yeah, momentum literally needs to make a heroic move to produce another breakout from here. Let me see what else. We got higher highs, higher highs. The structure is... So something I would like to see is a daily close at 2582, because that completes the double bottom like this. Oof, my drawings are terrible, but something like that. Why this is not log 2 price? It's not looking into scale to price only. Anyways, it's not fitting, it's not working as usual, the chart on TradingView. It should log me in like that. Ah, there you go. Got it. So that is the double bottom formation that is right there at the neckline. So if we close at 2574, that should have a target into that resistance of 66, which is more or less the 2631. And that will bring a new high. And then you get a global breakout, if you can do it, with the volatility already pinching the top. So let's look at the volatility closer on Russell. Volatility hit 11, then it hit 12, now we are at 13. So coincidentally it's putting higher highs. That's kind of the trend at the moment. There's no bearish divergence on the volatility, but there is bearish divergence on the momentum. So for me, the setup at the moment is already bullish, but bullish from support from around 2.5, and we are already ahead of that. Yeah. Let me see what else I want to do today. Let's have a look at NVIDIA. So NVIDIA already put a bullish pattern here, and it's already breaking out. Let's draw it properly. So that was the neckline. and the target is somewhere around $200. But we are in the middle of a breakdown on the daily. Ooh. No, I don't need that. When did we break down? We broke down. Oh. Okay, so that's the bullish side of things because it's reclaiming support. And this is the bearish side of things. So we have a reclaim that happened right there. So at support at 172, at that point you were reclaiming. That was the bullish setup at sigma -2 and at volatility about to pierce the PNR. So that was the bullish setup. That was the long. Then it completed the double bottom. At that point you are risk-free, and now it's breaking out from there. So now we are against resistance in a breakout that could lead into bleeding, right? So that is more risky than the setup that I'm talking about there. The one that happened on the 17th of December, that's already gone. Now what's going on in here? Is this an area to short? I wouldn't say so. So we already got a rejection here at 58, right there at 190. And since there, after the rejection, we have put 193. So it's not exhausted yet. We haven't broken the neckline back down. The 186 has been tested multiple times, but it hasn't been broken. So there's just the hope that you could take a short in here and hope that it breaks below if you have something in the hand. But at the moment we have that resistance on the momentum. We have the 2 sigma. But we are in the middle of the volatility, so we are nowhere meant for the big golden opportunity. Question, we got a question. What is this Lux Algo setup? So this one is just support and Lux Algo. I use it. The indicator is called Smart Money Concepts. And I just use it to highlight a few things like fair value gaps. It's just convenient, and they give it to me for free. Unfortunately it's paid. I don't even have a clue how much it is. And on the Trading Parrot channel, in the description of the videos, there's like a discount in the description. But unfortunately, I've got no clue how much it is to get access to Smart Money Concepts. I know that they have some packages to just get some of them and not the full bundle. And let's go with the next one. Let's go with AMD. So I did Apple. Yeah. NVIDIA, I say there's not really great setup yet. AMD. Okay, AMD is pretty different, right? So in here we got the double bottom, and we are holding the 186. AMD is a little bit weaker, or if you want, is ahead of NVIDIA. Maybe AMD is doing it first. You can tell that we got the double bottom, we broke out, and now we are back below the neckline. The neckline is this one. And we are back below, potentially aiming to close the fair value gap of 206. That spoils the pattern. So if you enter in the long, at this point you are like, maybe I'm gonna close it, or at least that will be me, because you know, when it deteriorates in such a way, it's pretty much like flipping a coin, whether it's gonna succeed or not. You don't know, so you can literally just run with what you have instead of getting in trouble. In terms of momentum, it doesn't look that bad. It just looks like a painful retest. So AMD, it could be the case that all it wants is to hold there or take the fair value gap, and that's it. But if it breaks below the 42, then it was a horrible fake out. Let me know in the comments, which one would you like me to do as the last two stocks, or if there's any Forex that we could also cover. We got the Euro GBP breaking down in here multiple days. but it's forming some interesting pattern. It's accelerating. And it's a weekly breakdown of the euro against GBP. So GBP is getting stronger. That's interesting. So the breakdown on the weekly, accelerating. So the next support on the weekly comes in at around 85. And on the daily, we have some support at 86 and some at 84.3. On the daily, the volatility is already about to get too far away. And we are at minus 2.5 sigma. And we haven't been there since 24th of September in 2024. Wow. So that's very overextended to the downside on the daily. What do we have in here that could hold? I mean, the support is at 86. It's a little bit further away. So the opportunity could be to see what happens around this area in here. That's the area I'll be interested to see. Yeah. What else could I check? I think we're gonna leave it as this. And with time, we're gonna get a lot better for the live streams on stocks. I will definitely come up with some way of driving the video in certain way that makes sense. Like we could go on indices first and then cover the forex and just focus on the ones that are doing something, or maybe we start just with the alerts, or we do also the requests. Your comments, guys, is definitely gonna help me to come up with ideas to run this separate channel in the best way possible. So thanks so much for watching, guys, and I'm looking forward to the next one. I also need to think about how often I'm gonna do the live streams, but really cool, and I'll see you in the next one. Take care. Bye bye.